It's very unclear why the regime as it's currently constituted would engage in a negotiation with the US when it feels it's winning and it doesn't have a basis on which to trust the US. And so that's why I would agree with your conclusion that maybe the US administration will end up with an even worse outcome than it inherited either in 2017 or in 2025. And even if the US were to withdraw tomorrow, this region is not the same as it was. The Iranian regime is not the same as it was. The Israeli government is not the same as it was. The world has changed. And so we can't just expect there to be a snapback either to the geopolitical equilibrium that existed prior to this war started, or more controversially, the economic equilibrium that existed before this war started.
Hello, everyone, and welcome back to another episode of Majlis in Markets. As always, I'm your host, Hassan Jivraj. Before we begin today's podcast, please remember to like, share, and subscribe, and follow us on all social media channels, and also leave us a rating wherever you're watching or listening to this podcast. But now I'd like to introduce my guest for today's episode, Hasnain Malik. Hasnain, Assalamu alaikum.
Walaikum salam, Hassan. Hope you're well.
Hasnain, it's really great to see you. I used to read your notes from what was formerly Exotics, which is now your current shop, Telemir. And I used to get all your briefing notes back in 2013 when you used to write these weekly market updates on the Middle East equity markets and the politics and stuff. And that was at a time which was quite interesting. And I really want to talk to you about that today as well, like talking about geopolitics and the importance of how it relates to markets. But Hasnain, could you give us like a little background story of yourself and how you got to where you are now?
Well, I mean, I've spent kind of all my career, almost 30 years now, in investment research across kind of many different sectors. I spent the first half of it in developed markets, doing all sorts of sectors, utilities, technology, telecom equipment. And then in 2006-07, when I was still at that time with Citigroup, I moved to Dubai in the Middle East to start up their Middle East, North Africa equity research outfit. I was there until 2012. After that, for 2 years, I did my own research shop, a small place called Frontier Alpha. And then in 2014, I had the good fortune to move to what was then Exotics Capital and what has now grown into Telemir, which is an information, data, analysis, research platform for really anyone involved in emerging markets, whether they are investors, whether they are multinationals, whether they're insurance companies, whether they're multilaterals. A lot of research, a lot of information, a lot of curated data on that platform, and obviously a good deal of proprietary analysis of which I'm a part. That's how I've ended up doing this, but my focus on emerging market geopolitical risk and markets really kind of postdates my experiences during the Arab Spring of 2011. At that time, I was just an equity analyst on companies. I was covering food manufacturing companies, property developers and the like, and conglomerates in the Middle East. And when the Arab Spring came along, it kind of showed me that particularly at that time in emerging markets, all of the analysis you do to feed into discounted cash flow valuations or price earnings multiple comparable tables, all of that can be completely overwhelmed by the geopolitical and political backdrop. So when we saw that, the Egyptian market in 2011 was shut for 2 months, a lot of the ways that the rulers in the Gulf viewed their relationships with the US were recast, the way that international investors who were beginning to experiment with positions in the Middle East, were forced to kind of reassess what's the risk involved here. All of that feeds down into every type of asset you could invest in. And so for me, probably with a predisposition to be interested in things like politics, that really threw me into looking much more from an investment point of view at the macro political and geopolitical factors that are of interest to anyone looking for investments in any part of the region. And then at Telemir, I've been given the opportunity to grow that way of doing things, grow that practice into a global emerging market analytical framework. And that's how I am here now sitting in front of you.
Amazing. Hasnain, why do you think investors should consider geopolitics? And also, secondly, quickly after that, is why is geopolitics now become like a very big risk factor in a lot of investment decision making?
First question, why should investors consider geopolitical risk in the first place? Because it's as important as every other risk. It's as important as currency risk. It's as important as domestic political stability risk, and it's as important as any of the other assumptions you might make in a financial model that goes into valuing an asset. Whether that's future cash flows, whether that's competitive advantage at a company level, whether that's commodity input prices. It's just another one of those assumptions that you need to think about. Now, on your second question, which is, has this become more important or not? I would say in emerging markets, geopolitical risk has always been a part of the investment discussion. That is, so this is nothing new in emerging markets. I think what's changed really over the last 10 years is how geopolitical risk now is much more a feature of developed markets. It used to be said that the core distinction between developed markets and emerging markets was the absence of political risk in developed markets. And of course, that's been blown out of the water with both of the Trump administrations, with the rise of the populist far right, with Brexit, with all of these things that have happened since, which have really called into question some very long-standing assumptions that investors in developed markets kind of forgot about. The existence of free trade, freedom of navigation across ocean territories, respect for trade agreements, institutional norms. All of that is kind of breaking down. But that's been a common feature in emerging markets since they started. So for someone coming out of emerging markets, this is nothing new. For someone in developed markets, this is now a set of factors that they take more seriously than they have been. And perhaps for a generation of professionals in developed markets, they've never really seen an environment like this.
And how do you define political risk? Because if you think about it, right, from my understanding, is that political risk can be defined in two ways. One, which is political violence, like the war or stuff like that, where it's hard power being used, and then at the same time you have like political risk with regards to policy making, right? So how do you define political risk in your analysis?
I mean, it's all of that. It's to do with the stability of regimes domestically, and that then feeds into the coherence of policy, and it also feeds into the appetite, the political will for structural reform where it's required. And then in terms of foreign relations, geopolitical risk is evident everywhere in terms of the stability of borders, security, access to markets in terms of trade, access to commodity inputs, the security of the supply of those inputs, and then ultimately the pricing of those commodity inputs and the terms at which you can trade as one country with the rest of the world. So geopolitics kind of embraces all of that. But what makes it unique is the geo in that. A lot of this can be a function of geography. So, for example, when you look at original intentions of the second Trump administration to really pursue an America First policy, that was driven by an inheritance of geography. The fact that North America is isolated by two very large oceans from the rest of the world, and therefore the imperative to secure security within the North and South American continents was of prime importance for the Trump administration. Whether that strategy has survived is an open question that we'll probably talk about. If you look at the Iran war right now, what has made this a war with global impact is geography. It's the narrow choke point, which is known as the Strait of Hormuz, and maybe the next narrow choke point, which we'll end up focusing on in a few weeks' time, which is the Bab el-Mandeb Strait in the Red Sea. So that's what makes this more than just political risk and international relations. It's the results of the inheritance of geographic setups for different countries.
And Hasnain, you mentioned like people who have looked at emerging markets, this is nothing new for them, right? But those in like, say, more developed economies, this is something quite a new phenomena. Would you say people like investors who are looking at emerging markets now, obviously you could talk about the inclusion of GCC countries within indices, whether that be bonds or equities. Would you say now a lot of them have to look at the political risk? And how do you, or rather, how would you calculate or forecast or quantify this kind of risk? Is there like a big correlation between the performance of assets and, say, political risk?
So on the first part of what you're asking, this is nothing new for emerging market investors. On the second bit, which is the much more difficult question, which is how do you actually quantify this type of risk and how do you then express it in an investment strategy? I think the most difficult thing is, and the trap, and particularly when you look at, for example, a lot of investment houses and a lot of sell-side investment banks who've now recruited a lot of resource into geopolitical risk analysis, is that sometimes if you know a geopolitical event is about to happen, that doesn't necessarily give you the answer as to how asset prices are going to behave around that. Take one very good recent example, the Russia-Ukraine war. Russia invades Ukraine in February of 2022. You would have thought that if that's the only thing you knew, that would have highlighted an extreme level of insecurity and fuel vulnerability for a lot of Eastern Europe and Western Europe. Yet within 8 months, the Eastern European markets, whether it's in equities or Eurobonds or local currency bonds in markets like Poland, Hungary, Romania, Georgia embark on a pretty sustained rally. And from roughly kind of September, October of 2022 until February of this year, many of those markets have more than doubled. So the point here is that it's not that geopolitical risk gives you the entire answer, but it deserves its place amongst all the other factors that you would consider, such as inflation, growth, currency risk, domestic political risk.
In the age of AI, people say everything could be automated, but if you think about it, politics is still quite a human thing. Human decisions are involved. When a country decides to attack another country, albeit like you using AI to do the actual warfare, but in terms of making the decision to go to war or to go to conflict, and how you defend yourself is still done through human decision making, right? Not necessarily through AI or any kind of other platform.
Well, the thing you have to factor in, or where the most unpredictable element is, as you say, the human element. So you take this war as an example. For decades, any defense strategist, any military strategist who would have gamed out a number of scenarios involving a war with Iran would have factored in that there would be a response by Iran to challenge freedom of navigation through the Strait of Hormuz. But then you have to factor on top of that an environment leading up to this war where you had a US president under domestic political pressure as a result of, for example, not just the Epstein files, but also lower economic growth and inflation that was a little bit more stubbornly high than he may have wanted, and a lack of job creation. You also had a very long-term ally of the US in Israel, not just with a history of egging the US on to get involved in conflict with Iran, but convincing the Trump administration that actually this was potentially a relatively quick war. And the background of the Trump administration having enjoyed this really almost hubristic moment of conquest in Venezuela, a very quick and almost painless regime change. And so those factors have to be drawn in, that it isn't just about, well, rationally, if you were to game out a wartime scenario or an invasion scenario or an airstrike scenario, how would that play out? Because rationally, most of what we've seen since this war started could have been predicted. But what you could never have predicted was the exact timing of this war. And the perception that Iran was a very weak regime, the vulnerability to domestic politics at that moment, for example, potentially for US President Trump, the fact that the Israeli government may view this coming 6-month period as, quote unquote, its last best chance to attack Iran, where relations with the US are still very strong. That change in the opinion of Israel amongst the younger demographic in the US hasn't as yet started impacting election outcomes. The midterm elections are not till November. The Israeli general election is not till October. The US and Israel have clear conventional military superiority. Iran had just gone through this mass protest round. Those sort of factors, that coincidence of historical events, that's something that's very difficult to predict, and how that ends up leading to a new outcome.
Speaking of Iran, Hasnain, how surprised were you that the Americans and the Israelis took this attack? I think it took a lot of people by surprise of how quickly things, escalated from, they were talking, reportedly, negotiating a deal of some kind, but then all of a sudden, Donald Trump announces on the 28th of February that they're sending missiles and, strikes on Iran along with Israel. How surprised were you that this was taking place?
I mean, first of all, I have to admit that probably for a decade, I was one of those who argued that actually a hot military conflict with Iran was very unlikely. I have to be upfront and honest about that. And I argued that because actually Iran's capability to retaliate across the region and to impact global oil markets was always going to dissuade those who were wanting to attack it. Now, all of that changed really after October 2023. And if you look at the events since then, in terms of the wars that have taken place between Israel and Gaza, Israel and Lebanon, the attacks between Israel and Yemen, Israel in Western Syria, and then ultimately last year, the 12-day war between Israel, Iran, and then at the very end, the US and Iran. All of that has really kind of thrown that rational-based analysis kind of a little bit out the window, because the events of the last 2 years have meant that in the context of the last 2 years, this is not a surprising war. In the context of the last 15 to 20 years, this is a very surprising war. In the very narrow question of, is it a surprise that this war kicked off in the midst of ongoing negotiations, supposedly between the US and Iran, that's not a surprise at all. because if you think about the history of those negotiations, you have to put it into context. And this feeds into why maybe Iran is not that interested in negotiating right now. Because it was, remember, the first Trump administration that tore up the original nuclear deal. There were negotiations ongoing when the US launched airstrikes last year, or when Israel first launched airstrikes last year. And so for there to be negotiations ongoing this time around that were then perhaps showing signs of improvement, but then really kiboshed by the attack on 28th of February.
Are you surprised, which to me, like from all the media publicity, whether it's mainstream media or if you look at Twitter and new media, the way in which the conflict has been unfolding, it looks pretty uncoordinated, and the goals keep changing, seem to keep changing every day. First a minute it's like regime change, now it's like they want to control the Straits of Hormuz, which we'll talk about in a minute, and then now it's to kind of like bring democracy to Iran. So are you surprised, or are you not surprised that there's been a bit of an uncoordinated mission that they're trying to do here?
It is certainly, we can say that there were a maximalist set of war objectives laid out on day one. Everything from regime change to disabling nuclear fuel enrichment capability, nuclear weapons development capability, ballistic missiles capability, the ability to finance and arm regional proxies. All of those were laid out on day one. Very few of those, it looks as if, are going to actually come to fruition. And it's the nature of war that once war starts, tactics change, and it's only after the war you can really rationalize what truly was the strategy. But it's consistent with a narrative that this was never going to be a very quick war, the sort of war that I think, maybe only the most convinced neoconservatives in the Republican Party in the US might have dreamt of. This was never going to be that type of war. So in a way, it's not a surprise that the rhetorical objectives of the war kind of keep shifting. Because one thing that's very clear is from US President Trump's perspective, his main goal is to be able to brand whatever outcome he reaches at a point when he decides to withdraw US forces as a victory. And so in a sense, the more objectives you plaster across the wall, the more you can then claim that you have achieved, you can pick and choose which ones you decide that you've achieved by the end. So I wouldn't necessarily describe it as uncoordinated, but it's another reason why we shouldn't just take, Trump's Truth Social posts as a guide as to how to price assets. Let's put it that way.
But if Hasnain, if you cast your mind back to, like, we're old enough to remember the Iraq War, the second Gulf War in 2003, and then you can talk about Libya or even Afghanistan in 2001. These were done more multilaterally than, say, this, right? This appears to be done just like overnight or like over a very short period of time, albeit it was done in light of the negotiations. How have they been able to do so quickly? I know Donald Trump's had a lot of like ambitions to expand. He's talked about the Don Road Doctrine with Venezuela, like you mentioned. He's talked about other countries as well that they're targeting, reportedly Cuba. But like in the manner of which, compared to previous invasions, the speed just seems to be, unprecedented.
Well, the speed is not that unprecedented, because if you think, it was over a 1 to 2 month period that the US mobilized its naval assets in the region. The only difference in this era is that the US is taking less care to build a bigger coalition in advance of such a campaign. And in a sense, that's partly because in pure military terms, the US may not need that grander coalition, but in diplomatic terms, obviously it helps. I think also the US, in combination with Israel, has determined that actually the rest of the world will come along with it if required. When I say the rest of the world, I mean the rest of its traditional allied part of the world. And to a degree, you've seen that happen even this time. So you've seen, you just need to look at the reactions of the leadership in Germany, to a lesser degree the UK, but most of the EU leadership. They haven't come out with forthright criticism of this war as yet, because they know that in the same way that ultimately, for example, the GCC has to coexist with Iran, ultimately the EU and the UK have to coexist with the US. So that's how I think you would explain in a Trumpian world where there isn't this desire to necessarily do much multilaterally. I'm not surprised that they pursued this without building a large coalition. And I'm not even sure that if they had built that large coalition, would that militarily have made a difference to how this war is progressing?
I mean, if you look at it from the Iranian perspective, they've always, unfortunately, their modern history has not been so great, in the sense like they've been, powers, whether it be the First World War and then more later the Americans and the British overthrowing their democracy in 1953. And then reinstalling a monarch, which was overthrown in 1979. And then don't forget also they were involved in a very bloody and very brutal war with Iraq for 8 years between 1980 and 1988. And then they've had other conflicts as well, maybe to a smaller extent. But so they were from their rhetoric, from their side, they sounded quite ready for like any kind of military intervention or like activity from the Americans or the Israelis, right?
This is why this war is not as quick as I say, for example, the archetypical neocon in the US might have hoped for. And it's because Iran's pain threshold is completely different from that of the US and to a degree Israel. The moment that and I shouldn't really say Iran, I should say the Islamic Revolutionary Guard Corps and the leadership of that organization. The moment the IRGC recognized this as an existential war, and that is in the context of all of the historical events that you've recapped, and also the thing I mentioned earlier about the fact that all negotiations with particularly the Trump administrations, but let's just say the US in general, have, from an IRGC perspective, generally been fruitless or very temporary in terms of temporary outcomes. So for them, this was from almost day one an existential war. It was for them the last war. That means their capacity for pain, their capacity to withstand bombardment, and particularly in the conventional military sense, was far higher than the capacity of their opponents. And that's exactly why you've seen Iran go down this asymmetric, attritional, retaliatory strategy, because they know they can't win any kind of conventional battle. It is true that when Trump says that we've disabled their air force, their navy, we've wiped out cadres of their senior leadership, that is factually correct. But that does not stop the IRGC continuing to be able to prosecute a war, but on its terms. And its terms are disrupting navigation through the Straits of Hormuz, treating the Gulf Cooperation countries as collateral damage, and inflicting damage where it can, to the degree it can, on US military personnel and on Israeli urban areas to the degree that its ballistic missile and its drones allow it to.
Not to go back in history too much, but Hasnain, do you agree with this narrative? Like, I have a lot of Iranian friends, and they tell me, since the Iran-Iraq war in the 80s, Iran was very much using a lot of groups within the region, albeit, they have their own regional stories. So if you take Hezbollah, for example, which was born out of the 1982 occupation of Lebanon by Israel, you can talk about the Houthis, which have their own history within Yemen, and then you can talk about Iraqi militias, which have their own history as well, following the 2003 invasion by the Americans. What I'm saying is, like, they use a lot of groups to do a lot of fighting against or conflict against the likes of Israel and other adversaries. Right?
Iran has a proxy network in the region, and that's not unique to Iran, by the way. Many countries have many proxies across the whole world. And so either if you are a superpower in conventional military terms, you don't necessarily need proxies, although you'll still use them in fights that you don't want to get involved in. If you are not a conventional military superpower, then you'll resort to proxy networks, and the ultimate form of asymmetric warfare is terrorism. So this is a spectrum. If you have the budget and you have the capability and you have the technology, you may have the shiniest, most impressive military the world has ever seen. And if you don't, you will have the lowest cost, but still potentially very disruptive means of and Iran is obviously more towards that side, and its proxy network is very much a part of that.
The obviously outfall from the attack on Iran is obviously Iran's now responded. We'll get onto the GCC countries in a second, but obviously the most important one I think a lot of people are talking about in the markets is the Strait of Hormuz, where about 20% of the world's oil and other commodities as well go through this small, narrow strait, which leads, I think, out to the Arabian Sea and then the Indian Ocean. So for shipping, and a lot of this goes to places like China. How important is the Strait of Hormuz in all of this?
Well, from a global perspective, it's the single most important issue. Take one example. So if you look at the performance of financial markets since this war started, actually there's been a bit of a comeback for the leadership in, for example, global stock markets from big tech, whether it's the Magnificent Seven in the US or it's parts of big tech in emerging markets. But there's an interesting problem here. If you think that Taiwan and South Korea, which are the two engines of the supply chain for artificial intelligence, for the build out of data centers, because of their near monopoly on cutting edge semiconductor manufacture, Well, those are two countries that rely heavily on LNG imports from the GCC. And remember, Qatar is 20% of global LNG trade, and 5% of 20% of Qatar's own LNG capacity has been damaged directly from attacks from Iran. So that's 5% of global supply of gas, which is suddenly offline for a pretty substantial period of time, even if the Strait of Hormuz was to open tomorrow. So you've seen a spike in gas prices. You've seen a significant hike in the uncertainty of supply of gas for the likes of South Korea and Taiwan. And then also there are other unintended consequences. So Qatar was also the supplier of 33% of the world's helium in 2025. And helium is one important input into the manufacture of high-end semiconductors. So even though tech has performed relatively well since the start of this war, actually some of the key ingredients into the supply chain for tech hardware are in question because of this war. And that's the least observed part in terms of financial markets. It's a much more obvious one, which is if you are an importer of fuel and you are an importer of food, because remember the GCC is also the supplier of about 20% of the world's urea fertilizer, and we're in kind of planting season. If that's missed, if that's disrupted, then if you are a low-income importer of fuel and food, that is a very worrying moment. Because what does that mean? That means that you're going to not just have the inflation spike that everyone in the world is going to have, but you're going to have stress on your fiscal budget, you're going to have stress on your terms of trade, and that ultimately could translate into social and political unrest. So when you're looking at countries like Bangladesh, Pakistan, the Philippines, to a lesser degree, Egypt, Kenya, Nigeria, all of these have that challenge ahead of them. And that's over and above the challenge of just an inflation spike and a bit of fiscal stress in the developed markets.
How long will that take to feed in, do you think? Because a lot of people say that it takes a couple of months before that feeds into the data, right?
Look at central bank policy rate setting. There's already mentions by central banks who may otherwise have been expected to cut policy rates as their core inflation domestically comes down. They're now pausing because they want to see how this plays out. So you could argue it's already having an impact. In terms of impact on pricing, we're already seeing that. Oil prices up 40%, gas prices up 80% in Europe, helium prices up 40%. So you're already seeing that in markets. When do you start seeing it in physical supplies? Well, for a while, IEA's release of its strategic reserves, its membership's release of strategic reserves can massage the disruption to oil supplies. But ultimately, this is only a matter of a few weeks before you start to potentially run into physical shortages. Now, what's interesting is financial markets are not pricing that in. Financial markets are saying, well, actually, if we want to transact for oil in a month's time or 6 months' time, we're only prepared to pay less than what we are paying for oil right now in the spot market. So the futures price for oil is lower than spot prices. In other words, that's financial markets saying that we expect this war to be over relatively soon and then for things to turn back to normal. And even if it takes 6 or 7 months to go back to normal, we know that's where it's heading, so we'll price that in early. Now, my fear would be, particularly with 4,500 Marines on the way and 3,500 airborne troops on the way from the US. If we were to see any kind of ground incursion, it's very clear from all of the actions of the Iranians so far that they will escalate their retaliation. And escalating their retaliation brings squarely into focus potentially more attacks directly on oil and gas infrastructure in the region.
Donald Trump was saying he was quite surprised. I don't think people were surprised, but Donald Trump said he was quite surprised in the sense of which Iran attacked its neighbors and continues to attack its neighbors in light of these attacks by America and Israel. I mean, how unprecedented was that they attacked the GCC countries in this way?
Now, we can go back in history and we can look at the Houthi missiles launched at the Abqaiq refinery of Aramco. We can look at the Houthi missile launched at the ADNOC facility in Abu Dhabi. So it is not without precedent for the proxies of Iran to have launched these type of attacks. But it is certainly unprecedented for Iran to directly launch those. I think on your earlier comment about Trump saying that this was not something he expected. Again, I think we have to discount a lot the rhetoric that Trump comes out with, because in the same comments, he also said, well, even if I had known that was going to happen, quote unquote, I had to do what I had to do. So I'm not sure that would have made a difference to his calculus. As I say, for anyone who would have gamed out a scenario of any conflict with Iran, given Iran's conventional military inferiority, it was always highly likely that there was going to be an asymmetric response. And the attacks on the Gulf are a part of that asymmetric response.
But not just military targets, Hasnain. This was targeting civilian targets as well, right? Like hotels or other kind of civilian infrastructure, not just the military ones or the oil fields, right?
So, to provide a balanced narrative on this, not knowing either of us what the truth is, the balanced narrative from an Iranian perspective would be that we have attacked in an escalatory fashion in the way that we have been attacked. So when our military installations were being attacked, we retaliated on military installations. When our civilian infrastructure was being attacked, we retaliated on civilian infrastructure. When our oil infrastructure was attacked, we retaliated on oil and gas infrastructure. It really doesn't matter what the truth of that is. The point is that once an asymmetric strategy is started, there's no limits to that. As I say, the end point of an asymmetric strategy is terrorism. Now, if you're a GCC country, you might look at Iran's actions right now and say this is a form of economic terrorism.
And how devastating, I don't want to use this word devastating, but how impactful have these attacks been, albeit limited, on the GCC's economy so far? Obviously, it's a bit difficult to tell. We're about 3 or 4 weeks in this conflict, but how impactful has it been on the economies over there?
In pockets of the economy, the word devastating would be appropriate. So that would be on the sort of high-end tourism market in places like Dubai, Abu Dhabi, and Doha. There it would be fair to say that occupancy rates in hotels have gone from 100% to 10 to 20%. Devastating is an appropriate word for that. However, in the broader economy, that's not an appropriate word. You still see, by and large, people working, even if they're working from home. Schooling is ongoing, even though it may be from home. Restaurants are still fairly full. Mall traffic is still fairly busy. Cars are still on the road. Traffic is still an issue. So I wouldn't say that there has been the disruption of day-to-day economic activity. More importantly, though, is what happens in the medium term and the long term once this war ultimately ends. Because one of the principles on which the non-oil sectors of this region was premised on was physical security. So not just pristine law and order, but actually physical security in a military sense. And that's one thing that this war has brought into question. Now, what's kind of interesting is, we're having this podcast. I'm sat in the Middle East in the GCC right now. If you had told me a year ago that yesterday I'd be sitting here calmly in my house conducting this podcast the day after 5 ballistic missiles were intercepted, I would have been shocked. But here we are a month into this war, and I didn't have any physical disruption as a result of that, whether it was the drones fired over yesterday or the ballistic missiles, or any physical disruption over the last month. So that's why I think you have to distinguish between long-term impact, which is where there will be a reassessment of the risk associated with this region, very high short-term impact in very specifically defined sectors, and then actually a sense of calm in day-to-day economic activity. So there's not a simple answer to that question.
Hasnain, like the attacks have been varied on countries, right? So I think Bahrain and Qatar have been taking a big, and the UAE as well, have been taking a big brunt of the attacks, and Saudi Arabia and Kuwait and Oman to a lesser extent have been. So it's varied across the board, right? Of which countries we're talking about here.
Yeah, I mean, bear in mind as well, Saudi is a much bigger country, so proportionately the attacks are going to be less impactful. It's also worth bearing in mind that actually the intensity of attacks measured by the number of drones and ballistic missiles in the UAE is actually down compared to the first week of the war. In Saudi, actually, it's the opposite. In the second week of the war, those level of attacks intensified. Not to the level seen in the UAE or Bahrain or Qatar in week 1, or even in Kuwait in week 1, but significantly higher than they were in the first week. Now, the question is, how do you interpret that? Is that a function of a depletion in supplies from Iran, or a degradation in its capability to launch those missiles in general? Is it Iran actually rationing its use of those missiles to see how to prolong its supply, as it were, to be able to conduct this asymmetric warfare for longer? Is it Iran pulling in more of the GCC in this kind of low-level attritional pace of drone and ballistic missile launches? Again, the truth is we don't know, but all of those could be consistent with that.
The impact on GCC sovereign bonds from conversations with portfolio managers, fixed income people, hasn't been too bad from what I'm hearing. The only ones that have really got affected were, I think, real estate names. From your perspective, looking at markets, what's the impact been on sovereign credit and fixed income assets within the region?
So one of the unique features of the GCC, Bahrain, is that it's a region characterized by a lot of sovereign wealth. The ability to service sovereign debt is not really brought into question, by a war, because those sovereign reserves are so deep. What would be brought into question is where, over let's say the next 5 to 10 years, those sovereign wealth reserves get deployed. So, for example, not just because of potentially a reassessment of the GCC of its relations with the US, but also maybe the GCC requirement to redirect some of that sovereign wealth domestically after this war for fiscal stimulus. One thing that's brought into question is whether the likes of Qatar, Saudi Arabia, and the UAE will fulfill the commitments they had made to the second Trump administration for these massive investment pledges into the US. That's something to consider. But that's a completely different question from whether they're able to service their sovereign debt. Another interesting observation in regional markets is if you actually look at the equity index in Israel and you look at the equity index in Saudi Arabia, those are actually higher today than they were at the start of the war, which is completely counterintuitive. And in Israel, you might say, well, the largest company there is Elbit, which is a defense contractor. And in Saudi, you might say, well, the largest constituent company there is Aramco, so maybe there's a medium-term benefit from higher oil price if Saudi can get, let's say, the majority of their oil out to market in a way that circumvents the Strait of Hormuz. But that's still a pretty striking couple of metrics. Now that, again, it could be because those aren't as liquidly traded markets as, for example, the broad European markets or China or the US. So maybe there's some, mobilization of domestic capital to support those markets. But that, again, is an indication that when we talk about the damage to the local economy, it's a nuanced response. Pockets are very damaged immediately. A large swathe of the local economy actually continues. But in the long term, there will have potentially be a reconfiguration of how these economies attract capital into their non-hydrocarbon, non-commodity sectors.
Yeah, the perception from outside the region is that it's become a lot more high risk, and here in the UK, a lot of people have, since the Labour government came into power, a lot of people wealthy people moved from the UK and other countries as well, moved to places like the UAE, Dubai, to relocate. And now a lot of people here are talking about whether they want to actually quickly move. So I guess the perception outside the region as well has changed as well, right?
Yeah, but hold on. I think we've got to be clear what we're talking about here. If we're talking about the most recent arrivals from particularly the UK or Western Europe into, for example, Dubai economy or the UAE economy, you could make an argument that actually those most recent arrivals are arguably the ones who contribute the least to the UAE economy. So if they were the ones with the most flight risk, it might have almost a minimum impact. Bear in mind that this is a city, if you think of Dubai, that's grown from a population of under 1 million 25 years ago to something nearer in terms of daytime population, around 6 or 7 million now. A lot of that population has become a sticky expatriate population base because they now have long-term visas, they have invested here, they have bank deposits here, they have property investments here, they have businesses here. They're not going anywhere in a hurry because they may not want to go back to where they came from, because this still represents a much more interesting, lucrative, better lifestyle, professional opportunity than wherever they've come from. So if, to be crass about this, if the latest generation of British influencers have gone back and may not come back quickly, I don't think that will have a big dent on either Dubai or the Abu Dhabi or the Doha non-oil economy. But that's not to trivialize that in the medium term, there will have to be factored in a security risk into the pricing of assets in these markets that wasn't there before.
And then, Hasnain, the other thing is that, the diversification stories, right? Doesn't this also impact where they're going to redeploy efforts and resources after the war is finished? The GCC countries will have to think about it, right?
Well, If you think of the long-term trend of diversification in the GCC, so it's obviously it starts with oil, and how do you diversify out of oil and gas? Out of oil and gas, firstly, it was into commodity sectors like fertilizers, plastics, petrochemicals, and other natural resources, minerals, metals, etc. After that came transport, port infrastructure, airport infrastructure, globally scaled airlines. Alongside that came tourism. After tourism came expatriate freehold real estate, multinational corporate free zones. And then the next generation of diversification is going to be artificial intelligence and data center capital expenditure. Why? Because this region has space, it has supply of cheap electricity, and until very recently, it had a reputation for physical security. It also has very close relations with the US, which allowed it access to cutting-edge semiconductor technology. One of the key questions coming out of this war, when it ultimately finishes, is on the one hand, does the Gulf reassess its relations with the US? Because if the US historically was a close partner because it provided defense cover, but during the course of this war, it's the presence of US bases in this region and US military personnel in this region that has made the GCC a target of Iran's retaliation. Does that mean that that defense cover is flawed? And also, if despite a long-term relationship between the GCC and the US, the GCC wasn't able to dissuade the US from starting this war, again, will that call into question the strength and the value of that relationship? You have that consideration on the one hand, but then on the other, if close relations with the US are an important part of getting access to next generation semiconductor technology, and that is the key ingredient into the next leg of diversification, well, then that puts the GCC a little bit between a rock and a hard place. That, for example, if it were to seek alternative defense cover from the likes of, let's say, Turkey or Pakistan, those two countries cannot provide the level of defense cover that the GCC thought it had from the US. If it were to go down that route and to a degree erode its relationship with the US, then it can't necessarily drive the next leg of diversification into AI data centers. So that is going to be a very difficult paradox or a difficult square for the GCC to circle.
Would you say that's why that some of the GCC countries have deepened their relationships or increased their in cooperation with the likes of Israel to bolster their security?
Well, you could say that that was one basis on which the Abraham Accords were struck, and it remains to be seen as this war plays out whether those security benefits are realized or not, or whether that accord has turned into a liability. It's too early to say on that.
The wider, outside of the GCC, the wider regional impact, we're seeing a devastating attacks on Lebanon, which is not unsurprising, unfortunately, over there, being attacked by Israel. And there's been a back and forth between Hezbollah and Israel. How has the impact been on, say, the likes of Lebanon, Egypt, Turkey, and other countries outside the GCC?
Well, I mean, the core one is Lebanon. So again, to balance the narrative, from a Lebanese perspective, from a Lebanese government perspective, they would say, look, we were trying to disarm Hezbollah. We were trying to restore we were trying to repair the sovereign balance sheet. We were trying to get in place a government that could do structural reform. Hezbollah would say, well, this is just another pretext that Israel has used to engage in an invasion, having disrespected the ceasefire from a year ago. And from an Israeli perspective, they would say, well, Lebanon's government has not done enough to disarm Hezbollah. Southern Lebanon is still being used as a launch pad for missiles into Israel. Again, it doesn't matter from the perspective of investment strategy who's right, who's wrong, who has the moral high ground, who has the moral low ground. What matters is Lebanon as a sovereign bond had rallied very sharply from really prior to the 12-day war last year on the assumption that a weakening of Iran's links with Hezbollah would weaken Hezbollah. A weaker Hezbollah would allow a more empowered Lebanese government to re-engage with Western capital and to drive structural reform and to come to a détente with Israel and to engage in reconstruction. In my view, all of that has broken down again over the last 3 weeks. So whether you measure it by physical infrastructure destruction, whether you measure it by the loss of life in the thousands, the imposition of casualties in the multiple thousands, whether you've now kind of arrested any formation of a new empowered Lebanese government, whether you put the brakes on Lebanon's re-engagement with the IMF and multilateral creditors. All of that calls into question whether that rallied in Lebanese defaulted Eurobonds is sustainable.
And the other wild card, I think, a lot of people mentioned to me is Iraq. Iraq has been affected a lot by this war, right? Especially with the Hormuz being the Strait of Hormuz being closed, and they can't export that oil. How bad could this get for Iraq's economy?
Well, you're right. So they were the first to shut in capacity because they have the least storage capacity. They don't have the size of pipeline that circumvents Hormuz to the degree that Saudi and potentially the UAE do. What they do have, though, is still relatively deep sovereign resources. So again, the capacity to service their debt is not really in question. I would say the biggest risk for Iraq, but then also the wider region, is that this is not a short war. The maximalist objectives of the US and Israel are not met in a quick and clean fashion. And actually, what is left behind when at some point the US draws down its troops is an Iran that is no longer coherently controlled by the IRGC. In the sense that it's kind of the worst of all outcomes. Neither is Iran boxed in but internally coherent, nor is Iran undergone regime change. And instead what ends up happening is Iran becomes a civil war environment. And then you're talking about something that looks like post-Gulf War Iraq or post-Arab Spring Syria, but 3 to 4 times the scale, with more natural resources at play, with similar potential ethnic lines of fissure and division, with even more, an even bigger group of external countries interested in prosecuting their interests in Iran. And that's where you begin to talk about a physical regional proliferation of this problem, not just into the Strait of Hormuz, but into Yemen, into the Bab el-Mandeb Strait and the Red Sea, into the GCC, into Turkey, into Pakistan, into Azerbaijan, into Central Asia. That really would be the nightmare scenario for how this war progresses.
We'll get on to that in a minute because I just wanted to get your thoughts on that. But just on the global economy, Hasnain, one thing that's really surprised me is the US dollar has done really well and gold hasn't done well as much as people thought it would. And also Bitcoin as well hasn't really rallied because normally you'd think in a situation where there's a conflict going on, people would flood to assets. Well, I guess they're going to safe haven assets, but they're not going into more risky assets like Bitcoin. How do you interpret the performance of some of these assets?
So you're right, the dollar has increased. Actually, Bitcoin has rallied relatively since the war started. It's one of the relatively better performing assets. But gold has, without question, dropped. And that's, as you say, that's odd. If gold's a safe haven, why has it gone down? And there are a few candidate explanations for that. One is gold has rallied ferociously since the months after the Russia-Ukraine war started. It's more than tripled in that time. So maybe it was overbought. Maybe it's difficult to say what the value of gold should be. Maybe it was overvalued. Maybe it was too many people positioning gold to consensus of trade. The other is that, remember, what's happened in the Strait of Hormuz creates a global inflation shock. In a high inflation environment, gold may not be such a defensive asset in economic terms. And then the last is, it is still the case that despite all of the shortcomings of the US dollar as a safe haven currency, because of the overuse of sanctions, because of the desire of particularly the global south for an alternative to the US dollar as a default reserve currency, there is still today no alternative. So that's why the dollar has rallied. And the other explanation maybe for why gold has fallen is it could be that actually right now, very large institutional asset managers who position themselves in gold are prioritizing liquidity should there be any kind of big market correction more than defense. And that may also be why gold and silver and other such assets have fallen.
Yeah, there was one thing that just came to my mind, Hasnain. Some people on social media and some of the other podcasters was suggesting that the US decided to go into this because they wanted to stifle Chinese influence within the Persian Gulf with regards to oil purchases from Iran, because I believe China is the biggest purchaser of Iranian oil. And a lot of this is settled outside of the US dollar infrastructure payment system. So would you say there's also a case here that the US wants to stop Chinese influence within the likes of the Persian Gulf? And you can also argue with Venezuela as well, that they did in January, getting rid of Maduro to stop China's influence in these regions.
Yeah, so I think what you're referring to is the best effort to try and determine a global strategic rationale for why the US got involved in this war. So, putting apart its relationship with Israel, putting apart its long term antipathy with Iran, is there actually a grand strategy here that what's going on really is the US is reminding China of how vulnerable it is to fuel imports around, and specifically emphasizing the US control of key choke points where that fuel is transited through? I think that is a very heroic effort to try and justify why this war is happening. I don't think it is ultimately about trying to teach China a lesson or trying to curtail China's influence in places like Iran and Venezuela. Because I think, on the other hand, China is currently sitting on the sidelines watching the US get itself deeper and deeper into a potential quagmire in Iran. And that's something that's happening at the same time that the US is redeploying military assets away from the Far East arena and is consuming more of its anti-drone, anti-missile ammunition in terms of whether it's THUD capability, whether it's Patriot missiles, whether it's SAM missiles. So I don't think net this is a negative in a grand geopolitical military sense for China. Yes, short term it's pain because higher oil prices are painful for everyone, not just for China. Yes, Venezuela and Iran were two quasi-client states in an economic sense for China, but it's not as if that was they may have been the biggest buyers of Iranian and Venezuelan oil, but Iranian and Venezuelan oil were not the biggest share of Chinese imported oil. So I don't think that this changes the game from a Chinese perspective. And China was never in a position to project military influence and military power in the Gulf because it doesn't have a navy capable of doing that. It doesn't have any bases in this region. So I think, as I say, that is an effort to try and understand why the US may have done this in a multi-year grand geopolitical military strategy. I really am not sure that that's a description of the truth.
Are we seeing a global reorder shift? Because like a lot of people now refer to this not as the Middle East, but as West Asia corridor. Do you think that we're seeing a global reorder shift?
Well, there's no global reorder shift if the regime in Iran doesn't change. Because I think maybe what you're referring to is the creation of new supply chain routes overland, let's say from India all the way into Western Europe, that would perhaps transit through Iran and create a different kind of trade channel effectively. I don't think you can say that that's going on unless you have high confidence that there'll be a change of regime in Iran, not just from a regime dominated by the IRGC, but to a new regime that's coherent but leaning towards the West as opposed to being completely isolated. So I would say it's way too early to be making that kind of claim.
As we bring the podcast to a close, and you've just mentioned earlier about the best case or the worst case scenario for Iran, from your analysis, are you anticipating things could get a lot worse, or do you think things will calm down? Because from what we're seeing, as I said at the beginning of this podcast, things seem to be changing every day. 1 minute Donald Trump is saying they're going to overthrow the government there, and then now they're saying they're negotiating, and now there was talks I think a few days ago that they might co-manage the Strait of Hormuz. So I don't know what the situation. How do you read it?
Look, I don't have a crystal ball. I know not to trust or base my predictions on everything that US President Trump says because they're self-contradictory and they change. I also know that there's a possibility that things could get better if there was a full regime change in Iran and a complete reorientation of the new regime in Iran. But even in that scenario where they get better, it almost certainly looks as if they will get worse before that happens. And that's because it's going to require a very successful, unprecedented invasion of Iran to achieve that. And the risks attached to that are enormous. My biggest fear is that actually what's left behind is an Iran that is much more unstable, full of militarized elements, divided along ethnic lines, with multiple sponsors externally. And that's a proliferation of a civil war scenario that I don't think the region will be able to cope with easily.
But this is not the first time the Americans have done that, right? They tried to do that in 2012 with Al-Qaeda linked groups in Syria. They did that in Libya. They've backed different players they thought that were winning at different times. So it's not the first time they've backed different actors, right?
No, it's not. But it's the first time in a country the size of Iran, with the natural resource endowment of Iran, with the multiple neighbors of Iran, and a country so close to a strategic economic choke point in the Strait of Hormuz.
The one thing that's strange to me, Hasnain, is that I had the opportunity to study about the JCPOA, the run up to the JCPOA, which took about 20 years, I think, to put into place, and it was torn up by Donald Trump in 2018 when he came into office, and that deal took a long time, and it had also the buy-in from the likes of China and Russia as well, and now it seems that Donald Trump is playing with the idea of trying to do something similar. I mean, doesn't this seem like a bit self-defeating in the sense that he wanted a better deal and now he's having to go back to the deal he tore up about a decade ago?
Well, remember that deal for his constituency wasn't good enough because it didn't restrict Iranian activation of its regional proxies and it didn't stop Iran from developing ballistic missiles capability. So even though, as you agree, I mean, I would agree with you that that deal at the time appeared a reasonable compromise with as many parties involved as possible. But we can't run a control experiment of what would have happened if that deal had carried on as it were. We are where we are. And given where we are right now, with Iran perhaps legitimately being able to claim that it's winning this asymmetric war because it is disrupting Hormuz, the regime is still in place, it's still able to launch missiles and drones. It's very unclear why the regime, as it's currently constituted, would engage in a negotiation with the US when it feels it's winning and it doesn't have a basis on which to trust the US. And so that's why I would agree with your conclusion that maybe the US administration will end up with an even worse outcome than it inherited either in 2017 or in 2025. But that's happened. We're already there.
And if conflict did end, say, tomorrow, which we all hope for, how long would it take, do you think, for the Gulf economies and for the global economy to recover? Do you think that would take place within a matter of months, or do you think it would take years?
No, if the conflict were to stop tomorrow and everything were to rewind to where it was on 27th of February, then the global economy might recover within a very short period of time and financial assets will reprice back up very quickly. But the danger is that that's not going to happen. And even if the US were to withdraw tomorrow, this region is not the same as it was. The Iranian regime is not the same as it was. The Israeli government is not the same as it was. The world has changed. And so we can't just expect there to be a snapback either to the geopolitical equilibrium that existed prior to this war started, or more controversially, the economic equilibrium that existed before this war started.
So looking ahead, we're recording this on March the 26th. How should investors position themselves? Obviously, this is not financial advice or any kind of investment advice. People should do their own research. But how would you suggest, or people should think about politics going forward for the rest of this year and the years ahead?
Well, I'd go back to what I said earlier, which is that politics is one factor and geopolitics is one factor in a broad range of factors into any investment decision. It remains the case that by and large, investments that one thought were valid and appropriately priced a month ago are most likely still the investments that will carry you forward from this point, but at perhaps a lower entry price, at perhaps a more modest upside expectation. The world has changed, but it doesn't mean that the entire investment landscape has changed.
Yeah, no, I agree with that. I just hope, there's talk of Pakistan trying to broker a deal. There seems to be so much geopolitical problems in the world at the moment. No one's even talking about the conflict between Pakistan and Afghanistan or other kind of conflicts which are taking place in the world. So it seems like we all have to prepare all kind of geopolitical uncertainties. But Hasnain Malik, what's the best way for people to reach you or your research?
Well, the best way is telemer.com.
I'll link it in the show notes. But this has been a really great conversation. It's just a shame that there's so much turmoil in the world. But hopefully things will calm down. We hope in the next couple of weeks and months ahead. But let's definitely keep in touch, and hopefully we can catch up maybe in about 3 to 6 months' time.
Hassan, turmoil in the world is not an unusual condition. We had a short period of time at the end of the Cold War where that wasn't the state of affairs. Turmoil in the world is a natural condition of this world.
Yeah, I agree with that. I agree with that. Thanks, Hasnain.
Thank you.
Thanks.